Alright, guys. Wait, did I do that? Okay, okay. Hello, Matt. Let's go, let's go. Alright, guys, so let me see what's the view is here. Okay. A little bit more. Boom. Sorry, I'm switching things up over here, so hopefully people could see that. Okay. Okay, so not sure what to talk about at the moment, but I felt like, I think a lot of things has been speculating to be true, but I don't know, I've just been pondering on what is going to be next, you know? Is the short squeeze and, whatever people are speculating, is it going to happen? Okay. And if it doesn't happen, what happened? So anyway, so that's gonna be a cornerstone of the show. But also too, I'm gonna kind of saw a couple of video that I wanna to kind of address a little bit here. Nothing much, you guys. Just chilling. It's Sunday actually. Afternoon. Not much to do, and I thought, oh, okay, let me just chill out here for a bit. Okay. So I appreciate all of you coming in. I'm not quite sure how many people listen, but let's talk about the okay, hold on. Let me try to frame this real quick. Of course, the media is going crazy about how, again, this is the narrative, right? See, not Bitcoin and all that stuff. So they're going to drive that point home where Jimmy has been kind of missing the mark on Bitcoin treasuries and they should have buy more and all that stuff. So understand that these type of things are just narrative and all that stuff. So if you invest based on these media type telling you what to do and how to do it, if you believe in them, you probably would have waited until $4 or so, right? So now they're forced to reevaluate GME on a different light, right? So a couple years ago, they told you that GME would never become profitable. Never. They could never cut themselves too thin to the point where they're profitable. They proved them wrong just now, right? So with this recent report, quarterly report, you see that is demonstrated to be untrue. And when people are telling you operationally we don't make money, we do. And this is not even accounting for, the interest. Okay. So quarterly we did post a positive earnings. And just like Ryan Cohen was saying, we were profitable for the first time in fourth quarter for the last, how many years? Since 2016, you guys. The first quarter of profitable operational income. So that is monumental. I know the media is trying to downplay it. It's okay. I mean, again, the more they downplay this thing, the more egregious it looks to their side, right? So now they're forced to cover it, at least on a little bit hint of positivity, okay? And still, again, with that positivity, they will shroud it in some other, mumbo jumbo to try to sway the public opinion on whether they should invest in GameStop. I'm telling you, by the time they recommend it to regular people to buy into GameStop, GameStop is already well established. And by that time, yes, the more premium that you would have to pay for the shares that you are going to own. Because again, by that time, they are well established already. They are on their way, right? And so there's no risk to be had. So the less risk that you have on the stock, the less, a gain that you will get from the company in and of itself. Not saying that you might not be able to make, like you won't be able to make 10x, 15x, or 20x even. Okay, depends on where you are at in that ladder. Now you might argue like, oh, it's gonna take a lifetime for them to take it, for them to go to that point. Okay, I mean that's again speculation. In my opinion, I feel like the growth is already exponential, in terms of how many shares that they've been, not shares, sorry. When you accounted for the money that has been raised responsibly, they're not shilling out shares everywhere to the point where, shareholders are, left bleeding out of value from their own equity. In fact, he's been driving equity into the company for quite some time. And so you could see that on, let's see, yeah, trailing 12. I think, again, trailing 12, it's more comprehensive. So there you go. It's just more, because for every line that you see there, it's 4 quarter built into it already. Okay. So you could see the improvement right there, just operationally. Again, this is not including the cash pile that they have and accumulating based on interest, okay? And just the interest alone, this quarter, you could see right there, or this trailing 12, they're able to pull in $200 million right there, okay? Now, there's some asset write down over here that we've kind of taken note already, where they were selling the Canadian, European, and all that stuff. So some of that kind of taken effect on the asset in itself. Perhaps we were kind of selling at a loss because, again, the conversion note on the other currency that are not as strong as the U.S. currency. I think that's a reason why he's trying to close out French and what's the other one? French and Canadian. We already know that we already closed that down. So the next one would be French. And then, of course, we have Australia. So if Australia continue to lose money, I'm sure he's going to sell that off too. So currently in the US, we are profitable. If you were to see into it, dig into it later. I'm not going to do that. You guys could do that later for yourself. I'm sure you've seen a lot of coverage already on that. So I'm not going to kind of waste time on that. But guys, I mean, what? Look at this. You see these incremental changes in the profit margin, slowly but surely. You could see that the increase is like, what? How can they do that? Quarter by quarter, you are improving just by cutting, right? And the reason is that, there's not enough demand for the amount of stores that we were opening, that we had as a company. And so if more stores doesn't give you profit on the bottom line, why open it? Why open a business to lose money? It makes no sense, okay? And so in the world of just flashiness, right? People only appreciate you if they show you Rolls Royce or something, right? And so again, we are honing ourselves out from that. You don't need to show anything in order to give you that value. And it's more rich that way because, again, there's no bullshit, there's no pandering, there's no nothing, okay? What you see is what you get. Now, that doesn't mean, again, there's no value in here. It's just that the value is just going to be slow so that you weed out people who are just, here for a short time and spike the value at will. If Wall Street wants to do that to try to get retail to be so enticed to buy call, sell put, or whatever, just again to spike the chain so that they could make money off of retail, then Ryan Cohen, that's why leadership has done what they did on the convertible notes. Okay, so I mean, technically that's a call option, right? He's selling call to the public or to the institution at massive level. And so now you could blame it on him if that's what you want to do, but I wouldn't. He's doing that to benefit shareholder. Now the speculation is that, what can they do with the money? Well, they could do a lot. With cash, you could get into anything at any moment in time. You don't need to wait. You don't need to, you don't need to sell any. Let's say they go into Bitcoin, right? They could do that right now because it's consistent with their investment policy. Okay, they could buy privately owned company that are not in the market yet. They could do that, I'm sure, right? I don't think they need to ask for permission to do that from anyone, from shareholders. So again, the speculation of that is just that. Again, the reason why people are shying away from this, saying that GameStop is a terrible company to own, is because Ryan Cohen's style of leadership, which I like, right? Because again, that he's not going to over embellish anything. He's not going to hype any industry, any instrument that he's going to get into. I mean, even at the Bitcoin conference, right? That speech in and of itself should tell you what type of leadership he is. He's a very modest person who understands at certain points, but he's not necessarily going to go all into something, right? Just because, yes, Bitcoin has that allure, have that, hype to the max over here, because again, you see it everywhere now, where now all they talk about is Bitcoin treasury company. When it was at $18,000 a coin, nobody talks about it. Have you ever thought about that, right? Now, again, they promote Michael Saylor, and it used to be Michael Saylor is the dumbest person on earth, right? Now, because he created some value into his company, some hype and all that stuff, they're on the hype train too. And so, again, it's only a matter of time. I will tell you, I will predict that eventually Ryan Cohen's going to be paraded on TV soon. Okay, maybe within 5 years or so, when it's glaringly possible that yes, he did successfully turn this company around and thrive to the point where making millions of people shareholder rich, and they will only do that is when when the share price is already, way too expensive for you to buy into. And so they love to promote something that is overvalued to you. Right now, they're quietly accumulating. Just like I said, anytime you see a big, huge dip like this, they are gobble up like tens of millions of shares at a time. Okay, so that's why I'm saying that institutional level of ownership will increase next quarter. You're gonna see, instead of this amount, just like Larry Chain was telling you, and I think that's a signal. It's like, hey, watch for institutional ownership going higher, and this is the only way for your share, to appreciate in value, because now institutions are owning it. They own enough of it to make money off of it. Okay, and so that's when they're gonna pump it onto the retailer who have been sitting on the sideline thinking that it is just a meme stock, okay? That it's just going to be the same, the same gravitas as, any other meme stocks out there. And so that perhaps at that time they're gonna be like, oh yeah, Gmail is not a meme stock anymore. They're actually doing this and this and this right now. And so long as they have not promoted in the to you outright saying that it's the best investment, this is your opportunity to quietly accumulate as well, right? And in the meantime, of course, like, hey, if you think that it's not going to go above a certain point, then okay, yes, do your thing, right? I don't think it's going to cause any harm at all, to the company, because the company is already raising money that they needed, to do more of anything that they wanted to do in the future. So again, understand, the dynamic of every market participant out there, and then also learn to read the balance sheet yourself, learn about the leadership, so that you're not, going to be disappointed in the end for whatever reason. So $400 million of free cash flow right there. Nobody talks about it, right? Cash flow positive is the one thing that people are trying to point out way before, right? They were like, they're not even cash flow positive. Look, right? So now when they're like $400 million cash flow positive, what are these people are saying? Oh, they don't buy enough Bitcoin. Okay, all right. Well, keep moving the goalposts, right? So balance sheets is very strong. You cannot argue that anymore. You cannot say now that they're not profitable operationally, because they are. And they will say that because, again, oops, who's that? Oh, 1 second, give me 1 second. Sorry. Got a phone call. Okay. I'm back. I am back. Okay. A bit quiet today. Oh my goodness. I probably lost a whole bunch of subscriber now. I feel so bad now. I should not have said what I said. I'm sorry. Nah, I'm just kidding. All right, guys. So let's what else did I say? Okay. Let's speculate on dividends. I don't think Ryan Cohen's is a big fan of dividends, but he's just gonna keep stacking the cash so that he could expand it in the most efficient way. Depends on who you ask, right? People are gonna be like, this guy doesn't know how to manage the cash, and all he's doing is whatever, just selling into the share offerings, diluting the float and all that stuff, and not having any plan. When people have that kind of opinion on somebody like that, I question it, right? Because I feel like regardless of what this person is doing, right, if you see some result, okay, it's like for a company to raise $3 billion within 6 months, it has something, right? I mean, somebody has to put some value into that. And these are institutions. Like I said, institutions are not stupid, right? They know perfectly well that GameStop could pay them back. when they do those things, when they do those deals. Okay, just by the operational alone. How do I know that? How do I know that? Because they are okay with just 0%. That's what people probably like. They don't mention that enough, and then they're like, oh, they're just raising debt in order to buy into it. Watch out for that. Next month, next year, that's all they're gonna hear about. Oh, GameStop issue more debt in order to, try to survive. So I wouldn't be surprised if tomorrow's article is going to be like that, And so I haven't seen it. Maybe it's already out already, being written right now. But again, so that debt is only, a 0% interest rate. So it's a very free money technically for 5 years, 7 years, or whatever, right? And so with that cash, unless Ryan Cohen's going to be blowing it out to some company that lose billions of dollars every single year, which I don't imagine that he would do that, because again, he's a very conservative mindset here that will accrued more and more shareholder equity over time, slowly, right? And so with that balance sheets that he was able to clean up for the last, 3-4 years, the institution people or whoever bought those bonds, right, see that, hey, the balance sheets is improving. I have no reason to think that they are going to go bankrupt anytime soon, and they're willing to give it out to 5 years, 7 years. So what that does tell you, it tells you that the company will never go bankrupt. Well, anything could happen, right? Have less of a chance to go bankrupt in 5, 7, 6 years. So you could be assured that, your share is not going to go anywhere. Now, you could also, argue, it's like, well, if it's not going anywhere, anytime it hits 30, it seems like, it's going to drop down in value. And so how can you get rich off of that, right? Well, again, that's why people are think of different ways to earn from this. And again, like, I don't advocate people to do anything with their portfolio. I'm doing what I'm doing. That's it, right? And so, but for me, again, the long term prospect is much more rewarding. So I don't know. I'm thinking, like, within this trading periods, obviously we're all expecting that that something will come about this. But again, you have a obvious rigging over here that we've been seeing for the last 5 years. Okay, so understand that 6 years for the last, however long it's been for this company to get to this point. And so whether we are going to see this slow grind, okay, of upside, just like that, and it's just going to trade in this channel over here. Yes, there are times it's going to spike up and then boom, right, come crashing, and then the cycle repeat. And so that volatility will come to this stock. Again, so long as Ryan Cohen doesn't telegraph, it's going to introduce that element of surprise to the stock. And so it makes it difficult for people to pinpoint where to short, how many shares to short, and all that stuff. So that's actually beneficial in a sense, because that's it's kind of less enticing for people to short into the market. Only the retailers who thinks that they could, predict the movement that day might be able to. But again, calls and puts and all that stuff can be diminishing because of the IV. Okay, they could crush that IV any moments at notice, or spike up that IV at moment's notice. And so even the IV is manipulated too, in a sense. Okay, because again, they set the price. They are the one who sell you those calls. Okay. And yes, some retails are choosing to sell call as well. So understand that too. So liquidity provider and the rest of those calls perhaps is sold by market maker, to you. And so that's why the skewed is that anytime it goes up to that in the money call, they do not allow it to happen. They would much rather lose money on the downside. Okay, because again, they could refill it up by ETFs and all that stuff. Okay. So again, that's why it's so risky for you to like, it's very rare that you would you would hit it big, like Roaring Kitty over here. There's also a speculation that Roaring Kitty unfollow Ryan Cohen because he's fed up with the Ryan Cohen action. But I don't know. I mean, that could be possible. I mean, because again, perhaps he makes enough money that he doesn't really care anymore. In which case, a little bit bummed out if that's the case. But I truly think that if he see another opportunity in Gamestop, he will coming back. He will come back, to pay attention to it again, because nobody knows more about this company than Roaring Kitty. I don't think, especially in terms of like call options and all that stuff, or swaps and So next week, again, people expect a miracle here. Look, if it happens, I'm set up for it. I just bought a whole bunch over here. I bought my share back over here. I sell some on the run up over here. Because I know, just a portion that I have setting for a trading. Okay. And again, so maybe because I don't say this enough in some of my stream, and people forget this, I have my trading account, I have my option account, and I have my long-term account. So please understand that I'm a hybrid here, I don't want to offend anyone by, it's like, oh, how dare you selling this stock? I'm like, like I'm skewed to the upside for sure, but I also know that this stock could go down 25% in a day because of some negative announcement, again, what the public perceive as negative. Okay, even though it's positive news, doesn't matter. If they want you to think negatively, they will spike down the price. Doesn't matter. Okay, so again, that's why people said or they want you to believe that fundamental doesn't matter, but in the long term, fundamental will weigh out, all of the noise. Carter just did a segment about how Warren Buffett, tells you, if you think that the market knows more about your company, and when the price comes down lower and you don't buy it because you think that the market knows more than than the company that you're investing in, then you have no business in buying into that, right? Now, if you know more about the business and you see the dip and then you buy more because it's a discount in your opinion, then, the market's just, again, being irrational, right? Or they want you to believe that it is irrational. I mean, if you think that this is not overly, like, egregiously being attacked, I want you to look at this, right? Volume exceeded the daily volume. Like, see this white line? It's tons of volume. But for some reason, it doesn't cause the price to go like this, right? It should have. But again, they have this algorithm that will wet blanket it. We call it a wet blanket. And so you would see this type of thing right here. You see that? $21.50. But look at how many shares in this candle over here. Right? 300,000 shares. 100,000. Okay, in 15-minute candle. So let's zoom in. You see that? You can't tell me that this is 5-minute candle. For 5 minutes straight, don't see any price movement there. And if you even zoom further, we could see it a little bit more right here. It's ridiculous. So algorithm, short attack or whatever. But in all of the stock market history, do you really think that this is something that, like, it's traded like a penny stock for sure? And so with that, just know that there is a egregiously short attacks here that shouldn't happen. It seems like people are not looking into it far enough, I feel. But it's okay. I mean, look, the minute it comes down here, bankers, trackers, they are buying down here, like buying it substantially. So yeah, whether it's gonna happen or not, I don't know. But again, be in the lookout for the institutional ownership level going up in percentage, and then you're gonna beginning to see people stampeding into this. Okay, because they don't want to miss out on the opportunity either, you guys. Like, so it's a matter of time. It's a matter of patience, and yeah, just wait and see. Anywho, so let's talk about a little speculation here, okay? I truly think that I don't think anyone will listen from leadership side, but I would like them to at least not make an announcement, but would file something like this. I mean, how about earmark $2 billion? Just earmark it. You don't have to buy it. Earmark for stock buyback. Just earmark it. That's it. Just to signal to them, it's like, hey, we're capable of buying $2 billion back. I know right now we have sell. Why am I selling sell? Like sell. Stock buyback. Okay, so earmark $2 billion. Right? Why? Well, that's gonna signal to them. I'm gonna do stock buyback. Sorry, I'm writing it my mouse over here. So stock buyback, right? And again, that's gonna signal to them, it's like, okay, if you want to short some more, we're gonna buy $2 billion. We'll have the ability to buy our own stock back at $2 billion at any time, any point in time. Right now, we only have $100 million worth of stock buyback that we still have the option to do so. And so increase that to $2 billion. I don't know if that's a good idea, but I feel like, just having that option will scare these people, right? retail or institution who trying to short this thing to oblivion again. Now, if they're dumb enough to do it even without that announcement or that filing, then okay, all right, I guess the dumb stormtrooper effect is still intact. Um, um, you know, and also to buy more Bitcoin, obviously. Again, since Bitcoin is a craze right now, people are going to be more receptive and do it slowly. You don't have to do it all at once. Yes, while that was the opportune time to do it back in April, it's safer to do it slowly. What I would love them to do is just to, every time we earn some, put 10% of everything. Put 10% of everything we earn from cash or whatever, just, so currently we have what is it? 9 billion in cash, right? So buy $900 million worth of, uh, uh, Bitcoin. So, and then when we raise more, we just put 10% in Bitcoin and then save 90% for other general corporate purposes. And even with that 10%, in 5 years, you're going to be able to pay off all of the notes that we are issuing right now. Again, because Bitcoin it's valuable, but we don't want to sell Bitcoin though, because I truly believe it's going to become the most pristine collateral in the world. It's being, kind of compared to treasury bonds right now. I know treasury bond doesn't do very pretty, not pretty right now, because if you own bonds, your value of your bond is going to go down. But yes, you are going to get more interest rate coming in. But the interest rate that you would get is like, what, 1% more? In some cases, it's not even 1%. I know yesterday the rate did spike up 1%. But again, if the value of your bond goes down faster than the rate of you getting the money back, that's detrimental to your principal. Okay. So when you actually need the lump sum, you don't get the money back as much. So, but anyway, so with that, the Bitcoin price is going to be more stable than the actual what is it called, treasury. Okay, but that's like 10-20 years down the line. Okay. The whole point is that when you buy into Bitcoin, you don't ever sell it. Okay. That's gonna be forever thing. So 10% to Bitcoin. I think that's good. Conservative, much more than what BlackRock CEO, recommending into his wealthy client. Okay. And like I said before, privately owned company. So that's also a good venture to go into. So 3 points there. That's not just speculation. I think that's what he should do, right? But yeah, he might be listening right now. Who knows? Okay, so let's switch gear a little bit here, because I know talking about GameStop sometimes can be nah. So let's talk about the inflation real quick, because again, when people think that it's only 2% and then you shouldn't be worrying about it in perpetuity, that's a bit misleading, because it's like, again, because if you believe in that narrative, right, you're less likely to be more informed in the way that cash could be diminishing in buying power. yes, if you have hundreds of millions of billions of dollars, what is the rush? Okay? But for people, regular people like you and I, you have the ability to move much more quicker than this institution. Okay, that's your advantage actually. But the only thing is that the reason why people don't make that choice is because they believe in the lie. Okay, the lie is that it's only 2% inflation. That's the official number. But we all know that if you do the math yourself, I have a, what's it? I show, what is it called? Inflation chart or something.com. Let me see. Inflationchart.com. Yes, there you go. So with this one, currently it's calculated as 3% a year. Okay, now 3% a year doesn't seem that much, but over time you're gonna see this discrepancy. Okay, so in 10 years, yes, if you own the right instrument, okay, your buying power is still kind of the same, okay, as before. 10 years versus this year, okay. But if you own the right thing, you could outpace it within 10 years. So what does this tell you? It tells you that if you own the S&P 500 back here, due to inflation, you are actually staying even. Like you're breaking even. You don't get the ability to buy more or less. It's just that the money that grows in the S&P 500 is the same pace as the inflation. Okay, congratulations if that's the case. Okay. Now there are times when if you own S&P 500 within this 10 year, you do better than the buying power of the last 20 year due to the money printing over here. Okay, but in the last 50 years, you could see different here. I know 50 years sounds like that's a lifetime, right? That's a lifetime for sure. But like I said before here, if you, oh man, doesn't let you do that, huh? I wish to do away with this one. But back in the dot-com bubble over here, right? People were richer back then in terms of, purchasing power versus today. So it takes about 25 years, for the purchasing power, if you were to put money in the dot-com bubble and hold it until now, you have less purchasing power than 25 years ago. Even though you are buying the highest asset class that is ever known to man, which is the S&P 500, right? And that's the best performing, quote unquote, best performing. That's what they, advocate people to buy into, which is the S&P 500. Just park it there, don't touch it, and don't care about the individual stock. Now, the individual stock owners, if you pick the right one, obviously, is more like they are able to grow their wealth a lot faster. Okay, and so concentration, that's why they call diversification, is for people who doesn't know what they're doing. What Warren Buffett is saying. But if you concentrate it in the company in which you know and watch it carefully, you wouldn't necessarily say that it's risky. Well, because you know the business, you know how it works, you know how they make money, the balance sheets. If you see something that is that is detrimental, to the company in the future, you could make that choice by trimming your position or something like that. So that's why Warren Buffett typically don't trim his position unless he see the, the company going downhill from there. So famously, he shaves a lot of position out of Bank of America and all that stuff. Remember, a couple of years back, or even a couple months back. You've heard of that on the news, and now he's sitting on a massive cash position over here. What, $300 billion or more. So, with that, just I guess he's waiting on something, a dip or something like that. So now Jimmy has $4 billion more, to play with when the market crashed. So with this war looming, fear of whatever, you see that oil is spiking. Okay, so I think if you measure that against oil, seed oil, okay, they have seed oil. I think they have other stuff, no? Oh, right here, oil prices. Okay, with that, you could see that even though the value, the denomination of money is high like this, your purchasing power is still lower than the dot-com bubble. If you own, if you compare with oil prices versus, oil prices instead of money printing. Okay. And then this is all the money in the world. Not all the money. The M3 money supply. So the M3, you could see right here, it's perking back up again. Okay. So let's see. Within a year, it's going up again. Okay. What does that mean? It means that there is a buying up all assets again. Remember, they were tapering down. Okay. And now it's ready to go back up. Now, the Fed is not doing much because perhaps they are kind of doing it slowly over here. Quietly, not slowly, but they're doing it quietly based on their balance sheet, stock buyback or mortgage security, mortgage-backed security, and all that stuff to prop up the value of that. Because if people were to understand it, remember the debt-based system, right? So that was crazy too. Okay, so let's listen in to this gentleman here. He's gonna explain it pretty well. So let me just play it and have a break.
Fiat, it means decree by statement. It's money because the government says that it's money. I mean, we were talking with somebody the other day. They didn't even know that we were taking off the gold standard in 1971 with Nixon. They had no idea. So it's like the dollar exists because we say it exists. And we say it has value, and the world's gone into agreement with it after World War II or whatever it was with the Bretton Woods Agreement. And then everybody decided that the dollar was going to be the global reserve currency because it was backed by gold at the time, and it sounded like a good idea. And the dollar was like, okay, now the dollar is it's fiat, it's decree, it's a statement. It has value only because the government says it has value, and everybody goes into agreement with the fact that it has value. So if we spread the truth virus, the freedom virus of Bitcoin all across the globe, and we get people to wake up to the fact that this is truth, it's math, it's code, it's truth, it's incorruptible, and you spread that and you show people truth versus falsities, people will understand the truth. And that is part of our fiscal responsibility as citizens, right? To get out there, and our monetary responsibility to get out there and say your taxes are eating away your wealth, inflation's eating away your wealth, management fees are eating away your wealth. The 401k is the biggest scam on the face of the earth, man. Like biggest. It's horrible. Not on the face of the earth, but it's a big scam. And so you look at this, it's like crazy, man. Now wake up, open the eyes to Bitcoin, and then you open people's eyes up to strategy. So with the history of this, and it's funny if you look at like the banking system today, if you trace back anything to the basic source of it, you can understand where the basic irrationality started, and then one can understand. But the brilliance of planet Earth is they create so much confusion on this planet, so much confusion that they distract people's attention units, and they put so many problems in people's faces. Hence the war popping up, hence what's just happening with the tariffs, hence what's just happening with the fights between Elon and Trump, hence. And there's so much distraction that people's problems and their attention is so drilled into their right here. Their attention's here. They can't look this far out because they got problems every second they wake up. And so if you always have a problem 2 inches in front of your face, how do you see the future? If you always got a problem 2 inches in front of your face, how do you see the solution? If you're always stuck in the problem and you're always worried about putting out the fire, you don't actually look for a solution because you're putting out fires. And that's the brilliance of the people who have messed up this planet, right? Who've totally screwed it up by creating chaos and creating lies that distract people from the source of the actual truth, where the irrationality came in, where at one point it may have been rational. Okay. And you look at the first banks that were actually created on planet Earth. When you look at it, you trace it back to the goldsmiths. I mean, people were tired of carrying around gold, and they were tired of carrying around like, oh, I'm going to lug this gold around to go do a transaction. No, they put them with the goldsmiths. Goldsmiths dealt in gold. That's their business. They say, hey, goldsmith, hold my gold. So the goldsmith took the gold. And the goldsmith did what? They gave paper. And the paper was as good as gold. So they thought, why? Here's the paper. It's as good as gold. And so people walked around with paper, and they know the goldsmith is holding the gold. So like, we'll take the paper because we know it's backed by gold. But what did the goldsmith do? The goldsmith eventually realized, no, but not everybody comes to withdraw their gold at once. So what will we do? We'll turn it over, and we'll loan out money that we don't have. And we'll go and we'll use this leverage of the gold to turn it over. And that's how you got the fractional reserve banking system, where every dollar that's put in, they can loan out $9. So every dollar in deposit, they can loan out $9. And they turn it over 9 different times. While you get 0.5% or 0.01% sitting in a checking or savings account. It's ridiculous. And that's where it started to go off the rails, where paper was first issued and it went off the rails. It's like, how do you do that? And it wasn't truth. And through that, you got the current financial system that became the lie. And then you've introduced the Federal Reserve into the whole game, and now they control the money supply. Right? So again, fiat system is money by decree. It's printed at will. There's no limit. It's the decree. It's a statement because they say it so. It ain't backed by gold. All right. And if you look at the history of money, it's been printed at an average 6.5% since the last 100 years. All right. So you go to Bitcoin, you talk to people about Bitcoin. It's uninflatable, right? It's borderless. It's permissionless. It's capped at 21 million ever. There'll never be any more. It's backed by math, code, energy, time. It, at the end of the day is the real game. So if we're explaining this to an individual who has nothing to do without it, it's like, you have to get over the idea with people where they still think that they can touch cash, right? So when you're sitting down, my brother and I talking about this the other night, and we have other people at the table, and like, they don't understand the game, but the idea that it's digital and people can't touch it, that's the thing you got to get people past when you're explaining Bitcoin to them. But ultimately, your dollars are pixels. When you go onto your Chase account and you see your dollar, it's a pixel, right? You're looking at screens. Right. And you believe that the money in your bank account actually is worth something, but it's paper, it's incineration, it's nothing. It's backed by decree. So you get people off the idea when you're explaining this to family or a friend, and you get them off the idea and you go, hey, like, listen, like, the world's been digital anyway. Your money's digital anyway. When's the last time you had cash? When you're using a credit card, it's like it's digital. So we're already in the digital age. We have been for a while. People just can't wrap the concept around Bitcoin. And they think it's too volatile, but so is Amazon and so is Apple when it started. So is Tesla right now. Think about the tons of people that are invested in Tesla. Tesla's going up and down like a freaking roller coaster right now. And and it's still such a small percentage of global assets right now that with Bitcoin, we are early. With strategy, we are beyond early. Right. And so it's not financial advice that we're giving to people as we talk to them. It's the awakening. That's what this is. This is an awakening for people to compare the data of what the traditional financial system and what Bitcoin actually is, and then slowly bringing people into strategy so they understand strategy. And strategy is the most genius financial move on the planet, and nobody's going to catch them. They have all these different companies that are coming out. Trump Media is coming out. They're going to have $15 billion of Bitcoin that they're going to acquire. We have all these other companies like 21 Capital, and then we've got all these other Bitcoin treasury companies that are coming out in the world. It's fantastic. Love what they're doing, but strategy is the behemoth. Strategy has all these different Bitcoin-backed credit solutions to where they can give fixed income products to the marketplace, and they have all kinds of equity that they can continue to issue. So as the Bitcoin price goes up and as the strategy stock goes up and their stock goes up, they'll then issue more shares and they'll buy more Bitcoin. And that's just the game. And that's what they're doing. So it's a brilliant move. And, whatever happens right now, however the market's open on Monday, whatever's getting shaken out with what's going on with Iran right now, the purpose is to know that when we look at the current financial system, it is not stable. And so we just have to zoom out and look at the current financial system and know that when things go up and down, when Bitcoin times might get tough or it drops a little bit, or when strategy, when things go up and they get volatile, it's like looking 5-10 years into the future, like where is the truth? And the truth lies in Bitcoin. And then where is the future? The future has to be based on truth. Otherwise, it'll be a problem. And the old system is not based on truth. It's not. So this is the beautiful thing that we have going on right now. And yes, we have all these great companies coming out. To your point, Mike, we have Jack Mahler's coming out. I love what Jack's doing. And I love what Jack's doing when he's got this new product coming out that he has, they're issuing, you can put your Bitcoin up as collateral and then you can go get loans on your Bitcoin. And I think that's great for what he's doing. I was watching an interview he was doing the other day with, I forget that woman's name. I think her name's Natalie. And he was talking about his new product where you can collateralize, you can use your Bitcoin, it's collateral, and you can go out and get a loan in the marketplace, and you go out and you get that loan and you're paying like 12%. They're trying to bring it down to below 12%. I think if they can get down to 9 or 8%, where people get charged 8% interest if they go borrow off their Bitcoin, I think they have a real winner there. I think 12% is still a little high for people, but at the end of the day, I think it's a brilliant product. And I think what they're doing is intelligent. So we have all these wonderful things coming in the marketplace. We have Brazil coming in, and Brazil just announced that they're going to take a huge percentage of, up to 5% of their reserves, and it's going through legislation right now to where Brazil is going to have a Bitcoin reserve. And so more and more governments are getting on board. More and more great news is coming out every day. Let's not forget that there's only 450 Bitcoin coming out every single day. We have a supply shock that is coming soon. There's only so much. So there's going to be a certain time where the supply shock really hits. The demand is going to be super high and it's going to push the price up. Not financial advice, not legal advice, but I just like this is going to happen in the future.
But future. So again, it's a bit long-winded one, but I think it's a good segment to at least ponder. Okay. I know. Because a lot of time people, just like he said, like people have been so distracted, and it's not through the fault of their own at all. If you think back 20 years ago, people were working their ASS off, okay? And then, only to have their, value being diminished and then they end up blaming themselves for, why am I not getting ahead? I've been working for 30 years and I have not even earned quite enough, right? Lucky that if you have husbands and whatever, that earns more than you, great, right? I'm just so thankful that my dad was able to do that for my mom, So with his hardworking ethic, he still was able to amass whatever he was able to. And he was clever. But again, if he had known what I known about the stock market and all that stuff, right, he would have been a billionaire by now, right? Because he was born in the opportune time, back in those days, if you know about the markets and 50 years ago, right? Back in those days, these are the time in which if you plow everything you've got in the market right here and just held it for your generation, for the next generation, you would have had so much money already, set for life type thing. That's why they call it a generational wealth type thing. Okay. Now, if you own Bitcoin, obviously that's a lot more, like you earn even more, like, but in the early days, right? But again, that's just like the process of people coming into the system and knowing about it. Typically, you get so distracted to the problem right in front of you, you don't really think that far ahead. I can't tell you how many people even though they don't have anything right in front of them. It's so hard for them to even learn about Bitcoin. Right? Financial people, even, like, I know one CPA that I'm talking to right now, where it's like he doesn't even have any Bitcoin. It's like, okay, how do you not know about Bitcoin? He does know about Bitcoin, but again, the same narrative, like, oh, it's too volatile, it's too risky, it's this and that, right? And then so they just have money in the S&P 500, which is fine. I mean, traditionally it keep up with the inflations, and if you are buying it consistently and over time, over the span of 20 years, you actually keep up with the purchasing power of the inflation that is happening. Okay, this is what it tells you right now. It tells you that if you buy it from here and held it from here, the S&P 500, it will keep up with the inflation, but by only this much, right? From here to here rather than from here to here. Okay, I hope that makes sense, because of the inflation, you don't get the gain that you should have gotten based on the amount of money that you get, because everything else become more expensive, okay, in relation to what you earn. And so if the rate of inflation exceed the rate of your growth, your real rate of return is lower, right? That's why over the 50-year time span, or 25 years, actually, depends on when you bought it, right? If you bought it down here, of course, yes, you could, I guess, say that you beat inflation, so to speak. But still, your purchasing power is down here, right? But yeah, again, like, you guys, like, make your own decision. Like, this is just me showing you, of all time here. Even lower. Yeah. Sometimes, like, back here, if you go even further, back to the Great Depression, I bet you're gonna see, your purchasing power is diminishing. But anyway, so with that though, inflation doesn't seem to be a problem until when you go to retire, right? And this is what happened. So you have a segment of people in their golden years that are not able to exit out of the workforce because they cannot retire with the amount of money that they have, Social Security or even the savings, right? So that's the problem that we all have in America, the richest country in the world. Why? Because they don't understand that inflation eats up their saving account. Even if they're doing the correct thing, which is 401k, just stash it, set and forget it, buy 401k, don't worry about it, right? But remember, when I tell you, 401k is just keeping up with the inflation. That's it. So typically, how many people are actually saving 20%? That's the recommendation, right? 20%, and then just let the compound interest do the work for you, right? But even then, it doesn't even give you the lifestyle that you intended for.
Right into it.
You guys are trying to get away.
A walk with Rosie and Logan is a rare break for Marianne O'Connor.
The puppies.
Then she's back on her laptop, juggling 2 jobs.
Zoe?
Yeah.
Oops. That's crazy, huh? 2 jobs.
Sometimes up to 11 hours a day.
What did you think you'd be doing at 66?
Oh, I would hope to be retired.
And what are you doing at 66?
I'm working my butt off.
No savings, no 401k, not even enough to cover an emergency. She sold her home and with 2 other women bought a smaller one, living together to save money.
Thank you very much. How has that been?
Well, it's been a matter of life and death.
Roughly half of all Americans ages 55 to 66 have nothing saved for retirement.
Spicy, yeah.
O'Connor knew she'd be in that group, adopting and raising 3 children as a single mom.
I have a live for now philosophy, I guess.
How's that serving you now?
Oh, it's horrible.
Okay, so I know she was doing a good thing adopting those children, but she said it herself. She has a live for now mentality. Basically YOLO before YOLO existed, and now she's paying the price. And I know her.
Okay, I mean, people are going to be like, oh, she could have saved. She should have saved. Okay, I mean, have a good point. But Social Security could cover some of that expenses.
Situation's definitely different than all the people doom spending and doing whatever they want, whenever they want, not planning for the future at all. But she still ended up in the same place that most of my generation will probably be in. The other stat is pretty nuts, painting a picture of what's to come. Basically, 50% of people 55 to 65 have nothing in the bank account, no retirement savings at all. Nothing to fall back to that age.
You can always improve your situation.
For her and others without a nest egg, experts say it's not too late to make a plan. Continue to work, lower your cost of living, save what you can, delay Social Security benefits until 70 to get the
See, that's the conventional, right? But even then, you know, like I said, you could only keep up with the inflation. The growth is not there. Depends, right? If the market crash when you're trying to retire, you won't be able to, right? So that's also a risk as well. I wonder if it says here.
Dear younger self, make sure you are paid what you're worth.
Save for retirement as much as possible.
Don't cash out all your 401k at once.
I only have about 3 months worth of bill payments in my savings account.
We make very little on Social Security.
I still have to work to pay my bills.
I'm worried that my investments won't last me.
I don't have any retirement funds put away at all.
That's crazy.
I opened a Roth IRA when I was 54 finally, and I put $6,000 in it and let it sit there because I didn't know that you were supposed to invest it.
I think if I were to just leave
man, that's terrible. See, that's another mistake that people are making too. And, you know, when you put in the Roth, doesn't mean that it's going to be invested. You have to put it into whatever, you know, instrument. 401k, sorry. S&P 500 or whatever, right? Whatever traditional thing is. Give me the use in the YouTube. Why email? Nah, it's okay. It's okay. What is this? A premium with no advertising? No, I'm not gonna do that. But thank you for the invite, though. Appreciate you.
my money alone, not move it around, then it would be worth a lot more today.
A financial advisor explained to me that I had to invest it, and I did. And now it's over $41,000.
I would definitely advise younger people to put a maximum amount in their 401k or IRA match because that money grows over time.
Just imagine if I had knew how to do that, and when I was 25 instead of 55, it would be quite a bit more.
It's way better if you plan something way ahead of time than wait till the end like we have.
We've heard this a couple times about the Roth IRA.
Right. I mean, that's also ring true to, inflation too. Just because it's only 2% doesn't mean it's nothing. It's still something.
People opening them up, putting money in, and not knowing that you actually had to invest that money, so just kind of sit there until you realize. Missing out on a whole bunch of potential profit that is not taxed, and of course starting as early as possible. Like she said, she started at 54 and at 25 would have had so much more money in the bank, and also not moving that money around, thinking that you could outsmart every other investor in any of the hedge funds on Wall Street, trying to be able to make your money as fast as possible, because most of the time you just end up losing it all and completely ruin your life.
We didn't realize that Social Security would be so little.
Most of my debt has accumulated with things beyond my control. It's not like we go to Vegas and have a great time and run our credit card up, but we've always needed them as well when we fell on hard times.
I missed one payment on the credit card, and
Okay. Well, that's what sketchy people would say, right? It's such a normal thing. It's okay. What is the benefit of this? What is its premium with zero advertisement?
and it just ballooned. Within 6 months, it completely doubled.
The Federal Housing Administration.
Okay, so they're just telling you. Okay, so this is just talking about how boomers cannot even afford to retire at the moment. But again, I'm just going to piggyback on that as a warning, that you might want to think about the future a lot more than, today's. So I'm thankful that I am this age, and I'm okay with accumulating for now. I still have, more than, enough years to accumulate to that point. So I'm okay. And that's why I'm like so thankful too. Of course, I would love to know. I would have wished that I know what I know now 10 years ago, so that I don't make the same mistake as I am the 10 years that I've been making mistakes. Had I know what I know now, I would have opened my Roth way back when I was 18, when I was still, looking for jobs or anything. Like, I would have just saved in the Roth IRA and know how to invest and know how to kind of grow the money in that sense. Like, even just, literally I was starting 2017, and back then I was a lot older than 18 already. So I was like, starting with $7 a week, $7 a week, and then grow towards what it is today. And of course, like, I'm not rich beyond belief or anything, but at least it's growing, and I'm planning to grow even more. And so yeah, that's just the journey. And of course, with Bitcoin mistake that I did by selling it way too early and not understanding what the network's gonna do. I'm telling you, every single person that owned Bitcoin back then regrets selling it now. And even recently, I just had it, what I would say a year ago, and I sold way too early. I sold at $40,000 a coin, but I only have like $6,000 worth of it, and I thought, okay, it's gonna come down to $30,000 again, like trying to do the chart thing, right? Technical analysis and all that stuff. And so it turns out to be incorrect, and so now that portfolio would have been double already. So, but here's the thing: I bought it. I used that cash to buy into GME. So technically, GME appreciate a little bit more in percentage than Bitcoin up until this moment in time. So again, doesn't matter which vehicle that you put the money in, just as long as you do it consistently, that'd be great. You see, someone, I'm gonna give something back. Oh, okay. It's okay. I don't know. Still seems sketchy though, Casper. So, I know. Thank you for watching my video though. Appreciate you. I will refrain myself from showing videos from now on that has ads in it. And so you won't have to sit through it, but I appreciate the offer though. guys, I'm so careful on, you know, sharing my information. Therefore, that's why I'm not putting my face on my on my video for a reason, you know. You never know. People are online, you know. No one is showing their face. Sometimes, you know, there's a reason. There's a And on top of that, like, I'm so shy, you know. I did think about, you know, showing my face on the video, but again, like, you know, what's the point? You see me moving around, you know, like hands flailing everywhere, you know. But I know, like, sometimes it's enticing people. I'm sure I would have more subscriber if I were to put my face on there. Not to say that, you know, I look good or anything like that. I'm average. You know, you just think about four or five, okay? Like, I'm not I'm not that, you know, good looking or anything. Very, very average. But also too, I'm thinking like, oh my gosh, like, I might be just frozen, you know, every time I'm trying to make a point. And even just putting my voice out there, it's like a nerve wracking to me already. So anyway, I'm stuck being sketchy guy now. No, not really. It's just me not trusting people online. So it has nothing to do with you. So don't take it personally. I'm sure you're a good person and continue to be, okay? So give back. I'll be quiet now. Continue with the good stuff. Thank you. I guess 9.5. What is 9.5? It's much worse than you actually. Oh, okay. Sorry. Pretty ignorant in that, but yeah. Okay. All right, so anything else? I don't think I have anything else right now in my mind. Forward split. Oh yeah, that's another thing too. So with the split though, again, remember, you know, people thought that was gonna send the price crazily high, right? And it never did. Not a reflection of the company in and of itself. They're trying to do something that is, you know, allowing them to be able to raise money as time goes on. And so they did that back then, 2 years ago. Again, very beneficial for the company for today's purposes, right? And it seems like they were planning, you know, to be able to raise money whenever they can using the shares that they have offered. Guys, you know, I feel like if that doesn't prove to you that leadership of GME shows that they're, you know, delivering good value to shareholder, I don't know what is. Like, what would be the proof that you need? I mean, balance sheets look great. I know people don't care about balance sheets anymore, right? They look at it and think like, oh, who cares, right? If the revenue is not going up, it's like, okay, then that's the narrative that you're stucking in. Okay, be my guest. I mean, think about how much money they would have lost if they were to keep, you know, expanding their footprint, and no one has money to buy anything, right? Crazy. So yeah, understand that. Matt, you're average looking. He means, oh, thank you, appreciate that. So I guess it's on the eye of beholder, right? So just imagine that. Thank you, appreciate that. All right, so Anyway, so with that, I feel like that's a good note to end on. Like, I'll sleep well at night knowing that I'm a 9.5 through Matt's eye. Thank you. All right, you guys, I will let you go. Appreciate you. Appreciate you, Casper, for interacting. Very slow interaction lately because, I disagree with a few people. It's okay. That's a matter of life, right? It's a life of the interneter. Okay. Good night from Denmark. Okay, thank you. All right. Yeah, I'll see you. I don't know if I'm gonna be out tomorrow. It depends on what's the news is. But yeah, just don't be fearful. I know Bitcoin's gonna crash if the wars break out. But just like he was saying, again, it's this distraction, right? And so technology, like Bitcoin, is not going to go anywhere. Even if it crashed to $50,000 for a minute, guess what? GME has the money to buy it. Okay, there you go. So no worry in the world. GME has cash to buy all the crashes, this stuff. Okay. Market crash, people panic, we buy at the bottom, boom, done. Right? So position yourself very well, and then understand that you'll be fine. You'll be secured. Don't be doing anything irrational. Okay, X out your position because of fear. That's what they want. Okay. All right. I'll see you.